Happy Monday out there, Team 42. It's your skipper here at Darius to present our macro minute for Monday, July 15th, 2024. As always, we'll start with the executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions, as well as what specific changes you need to make in your portfolio, you need to be a client of 42 Macro. So today's key macro events are the Trump trade gathers momentum, the U.S. consumer loses momentum, and the Chinese economy slides towards the point of no return. In terms of market implications, prediction markets are now assigning a 2/3 chance of Donald Trump winning his presidential reelection bid after a failed assassination attempt this weekend. While this is the kind of exogenous shock that could perpetuate a phase transition in the market regime, it has not yet altered any of our core risk management signals. Cracks continue to morph into crevices in the U.S. consumer narrative, with the July University of Michigan Consumer Sentiment Report representing the latest blow. China's Q2 GDP, June activity, and June property price data were highly supportive of our China front-loading stimulus theme, in that they signal a mainland economy that is desperate for stimulus. We expect Beijing to more forcefully ratchet up fiscal, monetary, and macro-prudential support in the coming months. Transitioning to our 42 macro dashboard here, as always, we're wrapping up with a question from our community. This one's regarding economies, divergent economies. So it reads, should we expect some economies to diverge in the coming months? The question reads, you can argue that many developed economies have been following a similar playbook in recent years. Now that the economic regime is starting to shift / get wonky, should we start to see economies start to diverge in the coming months? More specifically, high government debt, high fiscal economies versus high household debt, lower fiscal economies. In other words, will the underlying issues with different countries and economies finally start to matter as we head into 2025? That's an excellent question. And the short answer is yes, we're already starting to observe divergence. If you look at our global liquidity monitor, where we're tracking, we're now casting trends across growth, inflation, and policy for all the major economies in the world. We're now starting to see a decent amount of dispersion amongst the trends in growth, and a decent amount of dispersion amongst the trends in inflation. We're no longer, we had some these ubiquitous periods where growth was ubiquitously slowing globally, or ubiquitously accelerating globally, where inflation was ubiquitously accelerating globally and ubiquitously decelerating globally. And that is starting to become no longer the case. And I like how the client here, the investor, is identifying a potential point of dispersion, specifically with respect to economies that are experiencing a positive fiscal impulse relative and have low debt in their private sector, versus economies that have a low fiscal impulse with a high debt in their private sector. Those economies are obviously likely to underperform as we get into over the medium term. And one final thing I'll say about this is that we're starting to observe more material evidence of a slowdown here in the U.S. economy. Nothing to be overly concerned about in levels terms yet, but by the time you get into 2025, after a couple of quarters of slowing, we may be at a level of growth that would be a little bit more threatening for the global economic activity and for some of these economies that are already on the brink. If you're talking about U.S. and global growth being, let's call it 110 basis points lower this time next year, not 110, 100-ish basis points lower this time next year, we could be having a more material discussion about some of the bigger divergences we're seeing in asset markets. Right now, there's been a lot less dispersion amongst economies and amongst geographies, and we would expect that to widen over the next 12 months and beyond that. So we'll wrap it up there. Darius Dale presenting. And if you want to know which economies we like on the long side, obviously, which economies we like on the short side, then obviously you need to be a client. We're not going to disperse that information here for free. So we'll wrap it up there. Darius Dale presenting our macro minute for Monday, July 15th, 2024. Everyone have a wonderful day. Best of luck out there. We'll catch you back here tomorrow. Cheers.